Well, hello everyone, and welcome to our free February 2023 I'm saying free more than once, free webinar today. QBO Cleanup, uncover the key steps to get organized, work efficiently, and know when you are done. I'm so excited that you're here with me today. This apparently is a very, very hot topic because we had, I believe, over 1,100 of you sign up for this webinar. So it's amazing. As you're joining me, and as Darlene has kicked us off in the chat, let me know where you are joining me from. I see Darlene. Lisa is joining us from the UK. So let me know in the chat where you're joining from. As always, it's just a delight to be with you. I was just talking to a fellow bookkeeper yesterday, and she was telling me how she's been following my content and has done my training since 2019, and what a difference it has made in her life and in her business. And I'm so excited to hear that. And it truly is my calling, and I love to do what I do here, and joining you via webinar and educating you guys. I see we have Carolyn from Florida. I'm just going to skip around because I know we probably have a few hundred people joining us today. Kyle from Texas, Tia from Washington, Robin from Florida, Lauren from Georgia, Diane from Louisiana, Allison from Texas, Georgia from Ottawa. Sorry, sometimes my Chilean accent gets the best of me. Raj from Kurdistan. Wow, welcome. Carol, hello, Carol. Lauren from New York. JP from the Philippines, welcome. Helen from Long Island, New York. Kim from Ohio. Renita from the Philippines. Holly from California. Jasmine from Chicago. Lots of Texans, as I see. And as you know, my eyes are trained to see Texas because I'm from Texas. Jerry from California. Welcome, everyone. I see Donna from in California today. I guess Donna's traveling. Hello, Donna. Vivi from Namibia. Welcome. I see Mangesh from Mumbai, and it's midnight. Oh my goodness, it's midnight in Mumbai. So thank you so much for joining me. I hope that my training will keep you awake today. Paul from Staten Island, New York. Lynn from Washington. So thank you so much again for joining me. I truly, as I said, I love doing this. I feel like we have this little family, and even though I can't see you, I feel you. I feel your love, and I feel just the sense of family that we have when we get together. And let's see, Terry from Kentucky, Parul from India, welcome. And we have Josephine from Orlando, Florida. So, again, hello, everyone. And so, we are talking about cleanups today. I know it is a very important topic, a very popular topic for all of you. So, we're going to dive right in. And as you continue to join, just let me know in the chat where you're joining from. I see Rodrigo from Charlotte, North Carolina, and Gianna from Colorado. So welcome. I'm going to go ahead and switch to my screen. I guess I'm already sharing my screen anyways. Um, and yeah, so we'll go ahead and get started on that. Give me 1 second to kind of get everything set up on my end. Okay. It's always exciting to do this live, and okay, and hoping technology cooperates with us. So just to kick things off, just some administrative announcements. This presentation is subject to copyright, and you may not record this presentation for purposes of sharing it on YouTube or on other social media. And you may not share the handout on social media. It's meant for your use. Speaking of handouts, so we do have handouts today. You should be able to see that in the handouts tab. If you don't, I believe Jesse Harris, my team member who's joining us today, will share that link with you in the chat. And Jesse Harris, as always, joins me to kind of do the behind the scenes stuff and monitoring the chat and the questions and helping me out. You are free to use the chat to talk amongst yourselves. But if you have any questions, please put them in the Q&A. We have a lot of you attending today, so it's very hard for Jesse to monitor the chat and try to send questions from the chat into the questions panel. So please just put it in the Q&A tab so that that's where I will look for your questions. Okay. And again, we just have a lot of attendance today, so it's hard for one person to monitor everything going on. And so if you can just cooperate with me, that would be great. In case you don't know me, my name is Veronica Wasek. I'm the CEO and founder of the 5MB Academy for Virtual Bookkeepers, where I empower virtual bookkeepers to become confident professionals and business owners. I'm also the CEO and founder of VM Wasek, where we provide bookkeeping, integrations, and consulting for Shopify sellers. And very soon we will actually will be doing coaching and training for bookkeepers as well. And there'll be an announcement probably next month about that, but I'm super excited that that's going to be happening very soon. I'm also the creator of the 5-Minute Bookkeeping YouTube channel and blog. I'm the founder of the Facebook group 5-Minute Bookkeeping with QuickBooks Online. I have been named a top 10 as well as a top 100 QuickBooks Pro Advisor. I am a CPA, Certified Advanced QBO Pro Advisor, and I live in Sugar Land, Texas, right outside of Houston. And in case you're wondering, because we did have a lot of really bad weather in Texas, we did not get that cold in our parts of Texas because we're further south than our friends in the Dallas area and some of those areas that really, even Austin, that were hit very hard. So I'm thankful for that. And my thoughts and prayers go out to our neighbors that were impacted by all of that bad weather. What will we cover in this webinar? We're going to cover the key workflows to take on a massive cleanup with confidence. We're going to talk about onboarding cleanup clients, the order in which you should work in. Like when you work on a cleanup, what order should you work in? The areas to clean up, addressing opening balances, the role of the tax preparer, and knowing when you're done. And Kyle says it was freezing here in New Braunfels near Austin, and luckily they were not affected. So I'm glad to hear that, Kyle. Okay, so before I get started, I'm just going to do a little reality check, okay, with you. I cannot teach you everything about QBO cleanup in one webinar. And so it was actually very hard for me to put this webinar together because I wanted to do so much more, but I only have enough time during the webinar. Usually I allow about an hour of me talking. And so just please keep in mind that I cannot teach you everything. And so I may touch upon some things. You're free to ask questions. And then based on the questions that you have, I'll probably put together more webinars to go a little bit more in depth. So what are some of the things that we need to do then when we're taking on a cleanup? The first very important step is diagnosis, diagnosing your client's books and getting a full scope of work. Last month, I did a full webinar on my paid diagnostic review system. So look for that webinar. And so as a result, I'm just touching upon this today. So the role and the purpose of a paid diagnostic review is to diagnose the books before starting the cleanup project. It puts you in control. It allows you to qualify your client to see if they're willing and able to pay for your services. And then you will be able to provide your client with a report of findings and recommendations. and you'll be able to show them exactly what's wrong with their books. It's a very, very useful tool for getting a full scope of work, for working with the right clients, and positioning yourself in such a way that your client is not seeing you as an employee, they're seeing you as a professional who knows what they're doing. So I can't believe I said that in one slide and now moving on. As I said, I did this last month and we did a full webinar on the diagnostic review. But the initial diagnosis is key. The next step when taking on a cleanup, money and legal, getting a solid start. When you're doing really any kind of project for a client, any kind of service, especially cleanup, there should be an engagement letter or a service agreement between you and the client. It is an agreement basically where you and the client come to an agreement about what will be done. So what will you do and what will be the price for those services and what will be the terms of payment. And so you should have an engagement letter and you should have payment before you start the cleanup. Usually you would want to get an upfront deposit or an upfront payment from your client. It's up to you for what that is. I sometimes charge 50% upfront, 50% near the completion of the project. As of last year, we're now charging weekly. So we just will charge, let's say if the cleanup is $6,000 and we will complete it over 6 weeks, then we'll just charge $1,000 a week. And it's all automated. So we're not waiting on the client to send money. Everything's automated and we're just getting that payment every week. Throughout our webinar, I will be sharing some lessons learned with you. So here's the first lesson learned. A client is not a client until you have a signed engagement letter and upfront payment. So until those two things happen, they're not a client, they're still a prospect. Why? Because you don't have an agreement of a desired outcome and you haven't been paid. And moving on to onboarding and getting what you need from your client. What is onboarding? I want to make sure that we all define it the same way because sometimes people refer to it in a different way. So so we're all clear, at least on what onboarding means to me. Onboarding starts after a client has signed the engagement letter and paid you in advance. During onboarding, you get the client up and running in your systems, and you get everything you need from the client to start the work. Onboarding ends when you start working on the project. Okay, so from the time they sign the service agreement or engagement letter and pay you until you start the work, that is the onboarding process. And it's getting them set up internally, and it's also getting everything you need from them. What are the documents that we need to request from our client? We're going to request PDF copies of business bank and credit card accounts. We'll request a copy of their business tax return. In the US, that would be for an 1120, a C Corp, 1120S, an S Corp, or a 1065, a partnership. We'll request accountants access to their QuickBooks Online. We'll request for them to make an introduction to their tax preparer. And we'll request read-only or collaborator access to any pertinent apps that you'll be using when working with your client, such as PayPal, Stripe. In our case, we work with Shopify clients. We get collaborator access to their Shopify account. And then any other relevant documentation that you need to work on your client's cleanup. When you're working with a cleanup client, there are certain things that you need to know about them. Number one, why do they need the books cleaned up? I know that many of you struggle with communicating your value. And so we need to know why the client needs their books cleaned up. It may be because they need to get their taxes done. They may need to apply for a loan They might be wanting to get investors. They maybe want to have better insights into their financials. So it's really important to know the why behind the reason why they're getting that cleanup. We also need to know which periods need to be cleaned up. Is it last year? Is it this year? We need to know. We also need to know when was the last tax return filed. So when was the last year for which they filed a tax return? We need to know how they are set up for tax purposes. So again, in the US, that may be a sole proprietor, S corporation, C corporation, or partnership. Keep in mind that LLC is not, LLC is a disregarded entity for tax purposes. So when you ask the client, how are you set up for tax purposes? And they'll say LLC, that's not a correct answer because there is no such thing as an LLC for tax purposes. And so then we need to find out, okay, and again, I'm talking from the perspective of US clients. Are you filing as a sole proprietor on a Schedule C, or do you have an S corporation, a partnership, etc.? And if they tell you that they have an S corporation, C corporation, partnership, it's probably a good idea to get the documentation showing that they actually have set up their business that way. We've worked with clients in the past who'll say, well, I have a partnership with my friend. And then you realize that it's not a legal partnership. So they're calling it a partnership, but legally it's not. And so it's always important to get that documentation. We also want to know whether they are on an accrual or cash basis for tax purposes, and whether there are anything that is specific to their industry in terms of bookkeeping and accounting. So here's another lesson learned. Start the work only after you have received everything you requested from the client. We learned this the hard way. And by the way, most of the lessons that I share with you, my team and I learned the hard way. Okay, so we've made all the mistakes in the past. Okay, and so here's another. Start the work only after you have received everything you requested from the client. Why? Because otherwise you're just going to start and stop, start and stop. And you already know that that's hard enough to do with monthly bookkeeping clients. It's even harder for cleanup clients because cleanups are very time consuming and can go on for a week plus. For our team, usually our cleanups last about 6 weeks just because of working on other clients. And so it's very important for us to make sure we have everything from the client before we jump into that cleanup. And so they stay in onboarding until we get everything from them, then we move them out of onboarding and into doing the project. By the way, I see that there are some questions. I will answer your questions towards the end, and I will leave time for that. Now let's talk about cleanup workflow and following a system. So one thing I didn't mention before is that my team and I have done hundreds of QBO cleanups. I feel like we've seen it all, but I'm continually surprised at the extent of how books can get really messed up. And especially now with our Shopify niche, that we see even more messes because of integrations gone bad. And so everything I'm sharing with you in terms of the systems that I will share in the workflow is based on having worked on these hundreds of cleanups and then putting together a system. But when you're taking on cleanup clients, you have some challenges. As I said before, cleanup projects are bigger, and so you have to be able to manage a bigger project. But for many of you, and the feedback that I have received from you, you're telling me that you don't know where to start. So where do I start? What order should I work in? And how do I know when I'm done? Because again, these projects are big. So I put together a workflow for what should happen during a cleanup. So as I mentioned before, that you're going to get that signed engagement letter and paid invoice. And that's what it starts, the project. And then you go into onboarding. And we already talked about onboarding and the things that you need to get from that client. Then we're going to perform the cleanup. As we're doing that cleanup, we'll also resolve issues. Issues come up, and we'll talk more about that later when it comes to beginning balances, adjusting previous years sometimes, not getting everything we need from the client. Sometimes there are technical questions. We have to coordinate with a tax preparer. And so there will be issues. There will be communication that has to happen during that cleanup. Then we'll go into a review phase to make sure that we did everything we were supposed to do, and then we finish the cleanup. When you're cleaning up a client's books, there are certain goals that you're trying to achieve. The first one is addressing opening balances, and I will talk more about that later. But it's basically looking at the balance sheet accounts and determining what needs to be cleaned up. So doing some level of cleanup of the balance sheet accounts and reconciling the balance sheet in QuickBooks to the balance sheet on the tax return. Then we're addressing completeness of transactions. And if you are an auditor or former auditor, let me know in the chat, because I am a former auditor. And so you know about audit objectives. So one of the audit objectives is completeness. Completeness means making sure that every transaction that belongs on the books is on the books. Because sometimes we have transactions that are missing. Maybe the books are out of date, or the bank feed broke and all of a sudden we don't have everything on the book. So we're just trying to make sure that, think of it this way. If we had a puzzle, that every piece of the puzzle is there for us to work on. We don't necessarily know where all the pieces go yet, but we have to make sure that all 1,000 pieces of that puzzle are there. And so we need to make sure that all transactions are recorded, and that the bank and credit card accounts are properly reconciled. So when we make sure that everything is recorded, and a lot of times we do that by reconciling properly, then we know at least that, okay, all the pieces of the puzzle are there. Next, we move on to categorization. And again, if we're looking at the puzzle, now we have to put the pieces of the puzzle in the right place. And categorization is just is categorizing transactions to the correct accounts on the chart of accounts. So we're just going to, again, we know we've got the 1,000 pieces for our puzzle. Now we have to start putting them in the right place. And then when it comes to QuickBooks Online, we have to also consider that we have what I call transactional cleanup. And that means that because we're working with QuickBooks Online, and because it's an accounting system that works a particular way, there are some account balances that we have to then know how to clean up, because journal entries are not going to clean them up. You have to clean them up in the workflow that QuickBooks Online uses. So for example, we have undeposited funds, uncategorized income, uncategorized expenses, uncategorized assets, opening balance equity, unapplied cash payment income, unapplied cash bill payment expense. I put others, but I mean, we've got QBO sales tax, QBO payroll, QBO inventory. So all of these areas, as I said, we have to then be able to clean up at a transactional level. Otherwise, I'm sure many of you have seen undeposited funds. Like you can go in there and there's 500 transactions going back to the beginning of time because nobody knows how to clean it up. So now let's talk about the areas to clean up. So we're going to talk about the areas that need to be cleaned up in the order of work that you should follow. Typically, what I recommend is following an order of work as best as you can. And The first step is to reconcile the balance sheet on QuickBooks to the balance sheet on the tax return Schedule L. So in the US, and I think I'm talking about this later, so I'm just going to leave it at that for now, then I'll go into that deeper. But in the US, the Schedule L is the balance sheet on a tax return. Next, we need to address the extent of commingling of business and personal expenses and transactions, because as you may know, we have clients that just connect every bank account. They don't care if it's personal or business, and they're paying everything out of every account. So we need to address that and figure out the extent of what is going to be the cleanup that I need to do now that I know there's commingling. Next, we want to verify that all transactions are recorded in QuickBooks Online and enter any missing transactions. And remember, we talked about completeness, making sure all the transactions that belong on the books are on the books. Then we're going to do the bank and credit card reconciliations. We'll address opening balances, and I will talk about that later. And we'll also do the reconciliations for periods that are being cleaned up. Next, we're going to clean up undeposited funds. Then we'll clean up all of the profit and loss accounts and all of the balance sheet accounts. But wait, there's more. So then we're going to clean up inventory if the client is using QBO inventory. We're going to clean up the accounts receivable aging, the accounts payable aging, the products and services list, the chart of accounts, and then we'll clean up other areas if they're being used in QuickBooks, such as payroll, sales tax, and then there may also be other things that you're cleaning up that are specific to your client. So for our Shopify clients, we have a whole set of clearing accounts and other things that we clean up for that specific niche. So now that you're familiar with the types of areas that we're going to clean up, the general order in which you should clean those up, let's talk about a cleanup checklist. A cleanup checklist is going to allow you to be organized. This is an excerpt of my cleanup checklist. It's available at 5mbacademy.com. And you can use this checklist just, I believe this is on an Excel format, or you can put it also on your project management system, however it works for you, but you need to be following a checklist. The checklist that I'm showing you is generic, but if you've done a diagnostic review of before you've done the cleanup, and you should have a list of all the things that need to be cleaned up, all of those things are going to be part of this checklist. So we don't want just a generic checklist. We want to customize the checklist to our client for their industry, and then customize it for the specific things that they need to have cleaned up. Here's an example from an excerpt from the checklist in addressing completeness, and again, ensuring that all transactions are entered in QuickBooks Online. So from our checklist, it says to verify that all transactions are recorded in QuickBooks, and then enter any missing transactions. So we're going to make a general assessment as to whether all transactions have been entered in QBO, import, or enter any known missing transactions. Sorry, I'm about to sneeze. Okay, trying to sneeze, but it's not coming out. Okay, I'll keep going. So we're going to, again, I'll repeat myself, import, enter any other known missing transactions. And then we're going to work through all of the transactions in the bank feed to make sure that, and again, all the pieces of the puzzle are there. So here are some tips. The goal when you're doing this is to categorize every transaction so that then you can do the bank reconciliations. So again, do we have the 1,000 puzzle pieces there? But what if you don't know how to categorize those transactions? So if you don't know how to categorize those transactions, then add the transaction to a cleanup clearing account called Need Information or Questions for Client. You can call it whatever you like, but it's just a temporary account. So as you're adding transactions and you're not sure what they are, just categorize them to that account. And then after you get additional information from your client, you will go back and recategorize those transactions. And you can use the QuickBooks Online accountant recategorization tool to mass recategorize transactions to make it simpler for you. Here's another excerpt from the cleanup checklist. So we made sure that all of the pieces of the puzzle are there. Now we need to do a reconciliation just to make sure. So we're going to do the bank and credit card reconciliations. So the steps are, if bank and, well, I don't know if I'm going to read all this. It's pretty lengthy. Let's take a stab at a couple here. So if bank and credit card accounts have been reconciled and you want to fix any problems or changes to the opening bank statement balances. So sometimes the accounts have been reconciled, but then someone went in and changed things. So then your opening balance is messed up. Well, you have to get that cleaned up. So you have to do that first before you even can reconcile. Then you're going to do the reconciliations monthly. Then okay, here's a really important step. And remember I talked about reconciling or properly reconciling your bank and credit card accounts. When I say a proper reconciliation is because even though you reconcile the account, you may still have old and clear transactions in the reconciliation window. And so you're not really reconciled until you've cleaned up those old and clear transactions. So this is really important, even just with monthly clients, you have to go through this step. So the next step is to clean up any old and cleared items in the bank and credit card reconciliations. And if you have old uncleared payroll checks, there's a particular way in which those have to be addressed. You can't just void or delete those checks. And I was very generous, guys. I gave you lots of excerpts from the cleanup checklist. And so here's another. For expenses. So when we're cleaning up expenses, what do? We're reviewing for unusual, unexpected, uncategorized, and miscategorized accounts. I'm just going to just give you a couple of these. You have the handout, but just for the sake of time, I don't want to go through every single line item. We're going to review for personal expenses and recategorize them to owner draws or distributions. We're going to look for fixed assets over $2,500 or the capitalization threshold and record those to fixed asset. Record them to a fixed asset account. And then we're going to review for any other miscategorized expenses. Let me get some water. All right. So we talked about the fact that we have a cleanup workflow, that there are certain orders, a certain order in which we need to work in. We talked about the order in which we should work in, and we talked about the importance of a checklist. And remember, I said that one of the key goals in doing a cleanup is addressing the opening balances. So let's talk about opening balances. What are opening balances? They are the balance sheet balances as of the end of the previous year or as of the last time a tax return was filed. So for example, let's say that you have a client who filed their last tax return as of December 31 of 2021. And now they need a cleanup of 2022 so they can get that tax return done. So the opening balances are the balances as of December 31 of 2021, because that is the last time that they filed a tax return. And when I refer to balance sheet balances. I'm talking about balances, all the balances in assets, liabilities, and equity accounts. This is something that many of you don't realize, is that balances on the balance sheet are cumulative. So they are there from day one, and errors on the balance sheet never go away. So that's why it's important to then clean up those opening balances on the balance sheet, because otherwise those errors will never go away. And that's the importance of cleaning up the balance sheet. As I said, those errors don't go away. And then again, we've talked about QBO works in a certain way in which we have to clean up some accounts at a transactional level. We can't just do a journal entry because QBO doesn't work that way. So, for example, bank and credit card reconciliations. You have to do a reconciliation to get those accounts correct. If you're using QBO inventory items, then you have to make inventory adjustments. If you have accounts payable and accounts receivable that needs to be cleaned up, then you may have to enter some transactions, debit memos, credit memos, etc., to clean up those balances at a transactional and customer level, for example, for accounts receivable. And if you're using the sales tax module in QBO, then you would have to adjust sales taxes within the sales tax module. So lessons learned: always clean up the balance sheet, or the errors on the balance sheet will haunt you forever. So let me say that again: always clean up the balance sheet, or the errors on the balance sheet will haunt you forever, because, as I said, the balances on the balance sheet are cumulative. And so even though that client may say, no, I only need you to clean up 2023, well, that's the profit and loss, but the balance sheet is an entirely different conversation, and it needs to be addressed. All right. Oh, and another thing too is that if you're not cleaning up the balance sheet, and let's say that your client now needs to show some reports to their banker, to an investor, to a third party. So they're going to go in QuickBooks. They're just going to print out a balance sheet and a profit and loss. They're going to say, hey, my bookkeeper, prepare these. So now the banker, the CPA, the tax preparer, the investor, they're going to look at those financials and now associate that messy balance sheet with you. So then the tax preparer thinks that came from you when it didn't. And so that's why it's important to make sure that everything gets cleaned up. All right, moving on to reconciling to the tax return. And by the way, if you're joining me late, I did say earlier in the webinar that I cannot teach you cleanup in 1 hour. And so I know that I'm touching upon some of these things. And honestly, if I were to teach you cleanup, it's probably 8 hours, okay? And so I know I'm touching on these lightly, and I'm not going deep. And it's just so that I can start to introduce you to some of these ideas, and then we can do other webinars later for you to get more in-depth knowledge. So again, addressing those opening balances. Another key to address opening balances in your cleanup is reconciling to the tax return. So the goal is to reconcile the balance sheet on QuickBooks, the balances on that balance sheet, to the last tax return on the Schedule L of that tax return. So again, I'm talking from the perspective of U.S. entities. Now, not every entity in the U.S. has a balance sheet on the tax return. So let's take a look at that. So on this first column, there isn't a balance sheet on a Schedule C, which is filed by sole proprietors. And there also is not a balance sheet for any S corporations, C corporations, or partnerships with assets less than $250,000. So for those entities, there's no balance sheet on the tax return. So then we have nothing to reconcile to. It can be a good thing, it can be a bad thing, but it makes it easier from the standpoint of a cleanup when we don't have to do that balance sheet reconciliation. But if you have an S corporation, a C corporation, or a partnership with assets greater than $250,000, then you will find what's called a Schedule L on those tax returns, and the Schedule L will show you the balance sheet. And as a best practice, then you should be reconciling the balance sheet on the books to the balance sheet on the tax return. Why do we need to do this reconciliation? As I mentioned before, ideally that balance sheet is more accurate than what we have on the books. Sometimes it's not, but sometimes it is. But the main goal is also, or another goal actually, is because retained earnings on the Schedule L should equal or reconcile to retained earnings on the balance sheet. And the tax preparer has to be able to reconcile retained earnings on Schedule L to retained earnings on the balance sheet. And one of the things that is of value, the value that we provide to our clients, is that our clients get tax-ready books. So that means that their tax preparer has to do very little to the books when they get them, because our books are squeaky clean. And so then the tax preparer is saying like, oh, wow, the team at Wasek, they're awesome. Their books are so clean. I can just do the tax return. That's what a tax preparer wants. That's all they want, is just to get books that are clean. They want the retained earnings to roll forward so they don't waste any time. They want to focus on the tax return and not cleaning up the books. So now let's go through an example of what I'm saying when I'm talking about the retained earnings and why it has to roll forward. So let's say that we have, pointing at the wrong thing with my mouse. Starting retained earnings as of 12/31/19 is $1,961. So if you look at this excerpt from Schedule L on the tax return, we see retained earnings, and we see that this is the starting retained earnings as of the end of 2019. Then we're going to pick up the current year net loss, in this case per the books in 2020. And in that same tax return, there's a Schedule M1 that shows the loss per books. Okay, so we're going to then add the retained earnings to the loss. That gives us ending retained earnings, and that ending retained earnings should equal what's on the Schedule L. And I don't know if many of you knew this, but again, this is what the tax preparers want, because when this doesn't reconcile, it means that they didn't pick up all of the transactions for purposes of the tax return. Here's an example of how you can do the reconciliation. So on the left, we have the accounts. I typically just print out, or rather, I export the balance sheet from QuickBooks to Excel, and then I just add these columns. So I pick up the balances from QuickBooks, the balances from the tax return, and then I come up with the differences. And then I address the differences. Sometimes it's just pennies, which is fine. It's just rounding. Sometimes it's, okay, and we have a difference, but these net out, or they're within 3 cents of each other, just because, okay, the tax preparer moved a balance. They reported it on a different account, but overall we still reconcile. And as I said, again, I can't show you this in detail. I'm touching upon some of these areas so you can be aware of them. Another challenge that we have in addressing opening balances is, what about prior year balances? What do we do when, hey, we're cleaning up this year, but it looks like something was wrong from prior years? So which periods should I clean up and which periods should I adjust? When considering adjustments to prior year balances, as a general rule, you want to avoid changing balances in QuickBooks after a tax return has been filed for that year. But in many cases, the books are really messed up, and the tax preparer maybe didn't even use the QuickBooks balances to prepare the tax return. In other cases, the tax return, or rather the tax preparer, has never updated the client's QuickBooks for any adjustments that they have made to the books. So this is really important. I probably should have added it to my slide in which I said the things I need to know about my client. I need to know whether the tax preparer used the books to actually prepare the tax return, or they may have used the books but never gave the client any adjustments. And so if that's the case, I need to get those adjustments from the tax preparer. I'm just going to go into one example of what do we do when we have to clean something up and it affects prior years. Bank account reconciliations. I'm sure many of you have come across clients who have never reconciled their bank accounts in QuickBooks, or maybe it's been 3 years, 5 years, whatever, since they did the last reconciliation. And so the reconciliations are out of date. Many of you have asked me, well, okay, the client didn't reconcile for 3 years. Can I just start, can I start in February of 2023 and then go back and reconcile the previous months? You cannot. Because remember, I told you that the balance sheet accounts are cumulative. And so when you go into QuickBooks and reconcile as of February, first of all, you likely won't be able to because you're going to have everything there for the last 3 years. And so you have to do it in order. So here is a strategy that we use. If you have a client who has never reconciled their books or have not reconciled their books for a long time, you need to do what I call a catch-up reconciliation as of the end of the previous year, or as of the last time that their tax return was done. Okay, so let's look at an example. Let's say that we were cleaning up 2021. The account has never been reconciled. And so we're going to do a catch-up reconciliation through 12/31/20. And I'll show you how to do that. Okay, so we're going to then go into the bank account and realizing that, let's say this client was in business for the last 5 years and they've never reconciled. I don't want to go back for every month in the last 5 years and reconcile every single month. So what I'm going to do then is to essentially do one big reconciliation so that I can get the right beginning balance for my bank reconciliation for the year that I'm cleaning up. So we're going to then start with the ending balance from the bank statement as of 12/31/20, and we're going to enter the ending date. And again, remembering that I'm cleaning up 2021 and I'm trying to get the right starting balance as of the beginning of 2021. So I'm doing it as of 12/31/20. Then I'm going to go into the bank reconciliation, or rather start the reconciliation and select all of the old and clear transactions through 12/31/20 in the bank reconciliation. You might have some things that are in transit at the end of the year, so you need to be aware of that. But for the sake of this example, there were no deposits in transit or uncleared checks. So we marked everything as cleared through 12/31/20. Then you're going to click Finish Now on that reconciliation. And you're going to get this message of, hey, you're out of balance. You're not reconciled, because the chances of you getting your reconciliation difference to zero is pretty slim. So you'll likely have a difference. So we're going to force the reconciliation. So we're going to enter the adjustment date as of 12/31/20, and then click to add adjustment and finish. Then we're going to find the account called reconciliation discrepancy in QBO, because that's where that difference will be added by QBO. And it's this amount, $1,443.15. We're going to open this transaction, and we're going to change the account to a temporary cleanup clearing account. We use cleanup clearing accounts a lot, just to kind of park things. So we're going to clean them up. We're going to park that transaction there until we figure out what we need to do with it. And I'll talk about this more. So I will move it out of I will move it out of reconciliation discrepancy, and I will put it into a cleanup clearing account. Now the account is ready to reconcile, starting with the year that we're cleaning up. And so that the beginning balance is now the correct beginning balance, so that I can continue doing the cleanup. Let's talk a little bit about cleanup clearing accounts. A cleanup clearing account is an account used to temporarily record adjustments until you decide how you will ultimately categorize those adjustments. So as I said before, now, okay, how do we know which period we adjust? When do we adjust it? And so for the moment, we're just trying to move and continue to move forward with this cleanup, because otherwise we'll just get stuck. And so we have to keep moving. And so we will put that difference in the cleanup clearing account. So then how do we get rid of it? Because the idea is when we're done with the cleanup, there can be no balance left in the cleanup clearing account. So again, it's just a temporary account till we figure out what we're going to do with that. And then we're going to categorize it like we need to. Let's talk about the role of the tax preparer, because this is really important, especially when we're now having to adjust certain things and we're not 100% sure what we do with them. We have to get the tax preparer involved. They are your best resource for asking questions about how the cleanup will affect the tax return. Whether it's questions about how transactions may affect the tax return, questions about the balance sheet reconciliation to the Schedule L, questions about which periods should be adjusted. The tax preparer should help you decide which year to adjust. Sometimes they'll say, yeah, go ahead and adjust the prior year, or no, put it to this year and put it in this account. And the tax preparer, by the way, this is very important, because I see some of you are giving tax advice to your clients and you're not the tax advisor. An amended return may need to be filed, but that is only up to the tax preparer. It is not up to you to decide that. It's not up to you to advise your client to amend the tax return. That is solely the tax preparer's role and their judgment and their decision. All right. Now, how do you know when you're done with a cleanup? Because as I said, cleanups are big. So you know when you're done, when you have completed the cleanup checklist, when the client has answered all your requests for information, when the tax preparer has been consulted and they have replied regarding any questions affecting the tax return or prior years or prior periods, and once you have reviewed that everything has been done. And so that's why we want that checklist, or we want all of those steps in your project management system, because then you'll go back and make sure that you did all of them, that they're all completed, that you did everything like the way you were supposed to. So lesson learned. Always check to make sure that you completed the cleanup checklist and that the financials look correct. Many times we get lost in the details because As I said, cleanup projects are big and we get lost in those details. And then we think we finished, but we really didn't, or we didn't check ourselves enough to go back and just take a breather. Sometimes we're rushing through it. Sometimes the client's tax preparer is waiting, the client is waiting, but we just need to just pause for a moment and get in a different mindset of reviewing the books once again, just to make sure that everything looks as it should. All right, I'm going to leave you with some bonus material that I will leave for you in the handout. And it's knowing the cause and the cleanup solution for common errors in QuickBooks Online. So as you'll see in the chart, and I think it has 2 pages, it does, that it's listing on the left the problems that you might be seeing in QuickBooks, the cause of the problem, because sometimes we'll see a problem, but there's a cause. Why is it happening? And then the cleanup solution. Okay, so that is in your handout. And we will be, if you didn't get your handout, we will send the handouts to everyone via email. And I believe Jesse shared the link with you guys in the chat. All right, I'll leave you also with some resources. My YouTube playlist on QuickBooks Online Cleanup and Diagnosis. I get into reviewing the profit and loss accounts, the balance sheet accounts, account by account. There's videos for all of that. If you're not on my mailing list, then sign up to be notified about my latest content, webinars, and courses. And if you're doing cleanups, you may want to use the Rewind app. I'm an affiliate of Rewind, so just full disclosure, this is an affiliate link. But Rewind allows you to do backups of QuickBooks, so that if you're going to do a cleanup, and let's say you mess something up, it will allow you to restore at a transactional level. And so you might be able to then, let's say that you messed up a bank reconciliation, you can probably go back and restore to before you messed up the reconciliation. So I highly recommend Rewind, and we use it for all of our clients. So as I mentioned before, I am the founder of the 5MB Academy, in which I teach virtual bookkeeping professionals to become confident business owners and confident bookkeepers, confident professionals. I know many of you struggle with confidence and knowing what to do, how to do it. And as I said before, after doing hundreds of cleanups with my team, we came up with a system for diagnosing and cleaning up the books. And as a result, can now do cleanups very confidently and profitably. I ended up putting together 2 courses, the complete QBO cleanup system, as well as the QBO pay diagnostic review system. And then I bundle those courses as well. And starting today, we are having a sale on our cleanup courses. So you're getting a 12% discount on our cleanup courses. On the QBO pay diagnostic review system, that is the complete process for discovering and diagnosing your client's biggest QBO messes. And then my complete QBO cleanup system is my full system and training, tutorials, checklist, workflows, everything you need to conquer cleanups with confidence from beginning to end. So all the things that I touched upon very lightly, I go in depth into all of those topics. And if you would like to buy both courses together and for the best price, then you can get the 2-course bundle of the diagnostic review system and the complete QBO cleanup system as well. And so you're getting a discount of 12%, and that sale expires a week from today on February the 28th. And Jesse is sharing the link to 5MB Academy, where you can find those courses. And Jesse, can you share the link to just the cleanup courses, which is, well, I guess I didn't share that either. But if you have it, go ahead and share it. If you can look up the cleanup courses, and there's a link for it, so they can just get to the cleanup courses. All right, so I'm going to go into Q&A, and I'm going to go for about 20 minutes. I know that there are many of you with us today, and I will try my best to answer your questions. I aim for that, but I know that we have a lot of you today. So let me transition to that. And okay, so now, like talking to myself now. Minimize and okay, so Q&A. Okay, hold on. What is that? Oh, there. And stop. And as I said, just give me a second because I'm just wanting to share the Q&A window with you. There we go. Okay, fantastic. All right. And let's see. Okay, so I also put up for you just a pop-up with the discount if you'd like to go to the courses that way. And I just lost my Q&A window, so give me a second. Where did it go? Hold on. Sorry about that, guys. Okay. Give me a second again. I apologize. Share screen. Boy, I'm just having a hard time. See, if you're worried about being perfect, don't worry about it. See, you just mess up like the rest of us, then you'll be fine. Okay, there we go. Great. Okay, let me get to the top. The window had disappeared on me. Okay, so Carol says, and I don't think Carol has a question, so I'm going to skip. Wait, am I looking at the chat? No, okay, I was looking at the chat. Sorry. Okay, Maria, would you know where I can get a comprehensive training on handling Square and PayPal transactions? I have seen some videos, but not enough to help me to perform a reconciliation and answer my questions. I am not aware of any training, Maria, but the team here at Wasek will be working on a PayPal course coming soon. Now, for Square, if you're wanting to do an integration, Bookkeep is an app that you can use to do an integration between Square and QuickBooks Online. But in terms of the full understanding of PayPal, we'll have a course coming up probably within the year. And you can also use Bookkeep for integrations with PayPal. Kim says, when do you recommend to do or to just start a new file for the year being cleaned up or caught up? I think the main thing that you need to keep in mind in considering that is the historical information. Is that historical information important to your client? Do they need to go back and look at customer transactions, vendor transactions? If that's not important to them, then you may consider starting a new file. I know many of you just start a new file just because, and you should consider that you can clean up a file, and in many cases, we clean up the file. But say in the case with some of our clients that had a Shopify integration gone wrong, and if they're a brand new client, we typically just scrap those books and start over, just because it's going to take us more time to try to undo all the mess from another app rather than doing it correctly. But the number one consideration for an existing file is the value to the client of that historical information. Rebecca asks, how do you clean up the old unreconciled transactions when you know they are duplicates? But if you delete a duplicate, it messes up the bank reconciliation start for next month. I can't figure out what the client did when receiving their money. Well, I don't, you cannot reconcile a bank account if there are duplicates, because then you would be reconciling 2 transactions when the bank account has 1. And so I'm not sure what you're saying, Rebecca, but you might want to then see if you may be trying to delete the transaction, the duplicated transaction that was reconciled instead of the one that was not reconciled. But you can't reconcile 2 transactions if there's only one on the bank statement, because you won't be able to reconcile. Jennifer asked, do you lock the books for the period prior to your cleanup time period once you adjust the opening balances? Actually, that's interesting. We don't. We lock the books after we do the cleanup, but I like your perspective, Jennifer. There might be some. I think it wouldn't hurt to do that. Denise is asking, is the cleanup clearing account a bank account type? No, it could be an expense type account. We put them in equity just because we know they don't belong there, but that's just so that it forces us to clean that up. So you could put it in expense or equity. Just remember, those balances have to be cleared out. Maria is asking, what if the tax return was done based on bad books? Do I still try to match the books that I am cleaning to the tax return that was made from bad data? Well, it would depend on the balance sheet. At the very least, you're just reconciling the books to the balance sheet on the tax return. You may still have to clean up the balance sheet, but you have to first agree to and reconcile to the tax return, because as said, retained earnings has to roll forward, and then cleaning up the balance sheet accounts is a separate step. We have had a client where the balance sheet was so horrible that we had to get guidance from the tax preparer, and he told us how he wanted all of that handled. Marion is asking, can you expand on collaborator access to online accounts? I have had issues with clients giving me the correct level of access. Most of the time for bank and credit card accounts, we ask for, we call it read-only. And then we tell the client, we just need to be able to download your bank statements and be able to see the deposit images. And we don't need anything else. And so if we spell out for them, these are the things that we need, usually they just talk to their bank and get that set up properly. Jamie says, do you have a separate or different engagement letter for cleanup and catch up versus ongoing bookkeeping? Yes, we do. We do include that engagement letter in the complete QBO cleanup course, and it is separate. Now, if let's say we're doing a cleanup catch up and they're going to be monthly, they may go on the same engagement letter, but they're 2 different sections of the engagement letter. Katie says, if my client has categorized some transactions, but not all, should I undo those so I can see all transactions in the bank feed? No. So we're just wanting to make sure that everything that hasn't been added to QuickBooks gets added to QuickBooks. And then once you do the bank reconciliation, if you're still missing some transactions, you will know, because you won't be able to reconcile. Kristen says, I have a signed agreement on a cleanup and payment by month by ACH. The client doesn't have any money to pay it anymore. Should I send them to collections? Well, have you talked to the client? I mean, I would first talk to the client to see if, obviously, if they don't have money, I think you need to disengage. I'm not a big fan of sending people to collections, but I think that is your choice as to whether you want to do that. I once tried to work with a collections agency and they never prioritized my work for whatever reason. And I just felt like there was so much negativity around that client and around the fact that, how could I let this happen? I didn't get paid, that I just had to let it go. But I realized that that could be a lot of money for you. But I would first have a conversation with the client. That's why I'm not a big fan of pulling money from ACH, also just because they may not have money. Maria is asking, if the client doesn't have QBO, how would you do the cleanup? How would you go to the client's office? Would you go to the client's office or get a laptop with our program? We only work with QBO clients and no other clients. And so if they have something else, we just don't work with them, just because it's too hard to try to master more than one accounting software. And as it is, we've done a lot of desktop and online. Now we only have one desktop client and do everything else on QBO. But just, at least for my personal preference, I would just rather be the best at one thing instead of trying to master other accounting software. Darlene says, shouldn't you already have access to their books before onboarding so you can price it best? Well, if you've done a diagnostic review, yes, I would have access to their books already. Brent says, regarding credit card reconciliations, I'm trying to perform the first reconciliation of an Amex account with several cards, which all appear as separate bank feeds in QBO. Any tips in dealing with that scenario? Yes, but whatever answer I give you is now out of date. So I know that there is an answer to that. And I think that's even covered in some of the Pro Advisor training by QuickBooks. But you may want to ask that question in my Facebook group, and you'll probably get an answer from one of the experts in our group. But unfortunately, I'm not in QuickBooks at that level anymore. I'm sure our team member Sandra, who's now the queen of QuickBooks, would just tell you the answer. But unfortunately, I'm not that involved with QBO at that level anymore. Alyssa says, what is the account type for the cleanup clearing account? And so again, I said it could be an expense account. We use equity just because we just like to put it somewhere. But again, it's a temporary account and it has to be zero by the time you finish the cleanup. Maria's asking, what do I do when my client doesn't let me contact her tax preparer? I think if a client, first of all, we get permission from our clients on the engagement letter. So it's included in the engagement letter that we have permission to talk to their tax preparer. And so then the client just has to make the introduction. If the client doesn't want you to contact the tax preparer, I would ask why, and just to say that, I'm just trying to make their job easier so that they can focus on the tax return. It should save your client fees from having to do extensive cleanup, and it should allow them to get a more accurate tax return. So if that's not important to you, client, then I'm just going to have to leave these things for the tax preparer to address, and they're going to have to charge you to do that. And so I just would put it that way, like, hey, if this doesn't make sense to you, well, you're more than welcome to just let them handle it, and then you'll have to pay them a lot more money to fix it. Let's see. Lisa says, part 2 of my question, once in reconciliation discrepancies or parked in the cleanup clearing account, does the figure out of balance go to, I believe you're saying opening balance equity, the member draws? No. So it's not, you have to then figure out where it goes. And let me finish reading your question. Part 1, if there's a large figure that is off from the tax return to books, how can you do one mass adjustment? That's the difference going to reconciliation discrepancies. So nothing ever should go into reconciliation discrepancies. And this is why I said you have to then get the tax preparer involved. In some cases, when we're putting a lot of things in the cleanup clearing account, some of those differences, they will net to a very small amount, which we consider immaterial, and then we end up just expensing it or putting it in income, whichever account, if it's a small amount. Other times you end up with a really, really big difference, and that's where you have to get the tax preparer involved to determine what they want you to do with it. But it's not an owner's draw. It is never an owner's draw. Well, that's not, I'm not sure where you got that, but that's not proper accounting. And I'm sorry, I don't mean to make you feel bad, but it's not, that's not where you would want to put that. When a QB desktop user merges to QBO, but they want to start their QBO fresh for 2023, and they're keeping QB desktop for prior years, is there a quick way to get rid of all the prior transactions in the QBO account? No. And I probably wouldn't. I would just start a new file, because I mean, you could use a transaction deleter app, but it's not going to delete any of your banking transactions. So there's really not a way within QuickBooks to do that. And it would be very, very time consuming to try to do it any other way. So they just should start a new QBO file. Yara asked, do you have any training for nonprofits? I do not. It's not one of the areas that I work in. I believe there are some Facebook groups that are specific to nonprofits that if you haven't already joined, you might want to join those. Laura says, if I'm cleaning up more than 1 year and the client hasn't filed taxes for those years yet, after you clean up the first year that taxes have not been filed, do you wait till the taxes are filed by the tax preparer for that year to move to the next year of cleaning up? Typically, no, we just get everything done. You might want to ask the tax preparer if they have a preference, but we typically will just clean up everything. Denise, in the QBO training bundle, are there sample engagement letters included for both the diagnostic review and the cleanup? Yes, there are. Yara says, when you say not to pay much attention to the details, do you mean the description memo? Does it matter if they are left blank? I'm not sure when I said not to pay too much attention to the details. You might want to remind me when I said that. But to answer your question about whether transactions should have a description or a memo, not necessarily. Many of them just download whatever comes from the bank feed, and we're okay with that. Jennifer's asking, my client's balance sheet has numerous old bank accounts with balances. However, when I spoke with my client, these accounts are all closed and no longer active. I want to clean all of the old balances. She's a sole proprietor, and the accountant told me she only needs the P&L statement. So can you clean it up to retained earnings? Yes. Just make sure that you do it as of the end of the previous year. So let's say we're cleaning up 2023. We're going to then write off all of those old bank account balances. Do it as of 12/31/22, and you can adjust retained earnings. And I know some of you are screaming because I said adjust retained earnings, but you can, because it's a sole proprietor and the tax preparer said that she can. And that's how I would do it as well. Okay, I'm going to go just a few more minutes, so I apologize if I cannot get to all of your questions. Olivia says, I am currently doing a massive 2022 cleanup of a client with 2 Shopify stores. Hey, one of the stores has many different payment processors. Oh, wow. Okay, lots of payment processors. Would you recommend to create a clearing account for each payment processor for each store? Even though I would end up with about 15 clearing accounts, yes, that's what I would do, even though that's a lot. But that's really the only way in e-commerce to be able to handle that is different payment processors get or each payment processor gets a separate clearing account. And so if there are 2 stores, then you have to have that many clearing accounts. Laura says, we did a major cleanup of a yacht broker and still have 200,000 in the cleanup clearing. It is not income or expense. These are incoming and outgoing unidentified transfers of boat sales that are missing. Client cannot remember what these are. Once boat sales are recorded, the commission to the broker is the only thing that can be classified as income. What can we do with the unclassified transfers? Well, I'm not familiar with this type of accounting, so hold on. Client cannot remember once both sales are recorded. The commission to the broker is the only thing that can be classified as income. I don't fully understand that, or what happens to the rest of the income. I'm assuming that there's a commission, but in that situation, the client would have to tell me how to record that. I would assume somebody also is owed a commission that maybe they don't know about it, or commissions are overstated, but it would not be up to me to decide how to record that 200,000, because the client can't come up with what it is. But it's got to be something, because they got that much money in there. Yeah, sorry, I don't know enough about it to tell you more, but I will lean on the client to provide more information. Let's see. Kim says, I have a sole proprietor that makes less than 50,000. Schedule C, do I need the taxes from 2021? No. Well, if you mean the balance sheet, no, because there's Schedule C and there is no balance sheet on the Schedule C. Mike is asking, have I used auto review before? I am familiar with it, but I do not use it. And okay, so okay, let me try to get, if you need to leave, go ahead. I'm just going to do one more, and that's it. So I'm going to answer Leanne. I'm sorry to Maria, Gisela, Jennifer, Amanda, and Sharon, if I cannot answer your questions, but I apologize, but I know we're running out of time. So just one last question, and then I will wrap it up. If a client tried to move from QBO to desktop, but just started a new desktop file for 3 months, then changed their mind and resubscribed to their old QBO file, is it possible to transfer the 3 months of desktop usage into QBO without missing the previous data? I would not attempt that. Is there a way you could do some sort of data migration? Yes, you could use Sysant to pull transactions out of a desktop and put them in online. But honestly, that's just, it's a data migration project is involved, and you have to do it in certain steps. And I think it'll just take you much longer to do that, and you still don't know if you're going to do it correctly. So I would just take the information out of their desktop, actually connect the bank feeds, and just categorize all those transactions into their QBO file. Now, if there are some like vendor invoices or things that maybe might make sense to import, I would do that using Sysant. All right. As I said, I'm sorry that I cannot get to all of your questions. We had so many of you attend today, but thank you so much for joining me. As I said, I love doing this. I love bringing all of this content to you. I hope that you learned something new about cleanup today, and I will continue to do more topics on cleanup and diagnosis, both on webinars and on YouTube. And I will see you next time. Take care, everyone. Bye.